According to 451 Research, Apple's iPhone in the US has a 96% customer satisfaction rating. That's critically important, and I'll talk about why in this video, as well as a couple of other things that I think Apple stock investors need to know right now. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Apple told investors in their quarterly earnings call that they continue to see high levels of customer satisfaction in the US at 96% specifically as measured by 451 Research. And for those of you that don't already know, I follow a 6-step investing framework when evaluating publicly traded companies like Apple. And one of the 6 steps in my framework is the customer value proposition. If customers value your products at a high degree, that's a good signal for the company. It's a good signal that this customer is likely to remain your customer beyond the next year or beyond the next few years, maybe even for the next few decades for certain types of companies. And so it measures how valuable customers feel they are getting for the money that they're spending, or how much value customers feel like they're getting for the dollar that they're spending. And at 96%, that's extremely high. That means that customers that are buying Apple's iPhone, they feel like they're getting extremely good value. And so that makes it very likely that when it comes time to upgrade, that they're going to upgrade to the next iPhone, right? It also makes it very likely or highly likely that if Apple announces a new product, that these customers will give it a try. And so that opens up opportunities for Apple. It also allows Apple to increase prices if they want to or if they need to, right? We've been hearing a lot about the tariffs that are going into effect. If those tariffs raise Apple's costs and it needs to pass along those costs to customers, it can feel confident that if it raises prices by 5 or 10%, that it's not going to experience a big exodus of customers leaving for another option. So that's why the customer value proposition is an important step in my 6-step framework. And of course, I always couple that step with the other step, which is unit economics. And that step discusses why they need to be together, because you can offer a great value to customers, but if it also causes you to lose money on the bottom line, that's not a sustainable business model. So they go hand in hand. You need to offer a great customer value, and you need to be able to do that in a way that generates sufficient profitability for the sustainability of your business in the long term. That's what's difficult for business, is to do both simultaneously, and Apple has absolutely mastered that, right? Its products, people love its products, they keep buying their products, and Apple's margins are the envy of many businesses around the world. Another thing I wanted to talk about is Apple's subscription business. It grew double digits year over year, and they now have over 1 billion paid subscriptions across the services on their platform. That's truly impressive. Over 1 billion paid subscriptions. These are subscriptions to Apple Music, Apple TV Plus, Apple News, Apple Arcade, Apple Fitness, the bundle that includes those services, the cloud storage, all of which now has over 1 billion paid subscribers. And these are high margin businesses. In this quarterly earnings call, Apple told investors that their services business generated a 75% gross profit margin. 75%. That's almost double the 39% it generated in the products business. So these subscriptions are very lucrative revenue sources for Apple. But of course, it can't sell subscriptions if you don't have an iPhone or if you don't have an iPad or a Mac. So products are still very important to the Apple ecosystem, but these services allow Apple to make the products more valuable to consumers, and also allows Apple to generate more profits, more revenue from the consumer beyond that initial purchase of the iPad or the iPhone or the Mac computer. So if you're wondering what Apple's management team and the board of directors feels about the value of Apple stock, you can get a clue by looking at just how much money they're spending buying Apple shares. So they spent $23.3 billion in the most recent quarter alone on buying back Apple stock. And that resulted in buying back 100 million Apple shares. To me, this is a signal from the company's management team, from the board of directors. They feel the shares are undervalued. That's one reason why they're going out and spending $23 billion buying back their stock, because they can return capital to shareholders through dividends if they felt that the shares were overvalued, or they can find other uses for that capital if they felt the shares are overvalued. But instead, they went out and spent $23 billion buying Apple stock. That's a pretty good indicator of what management feels about the value of the business. Looking ahead, Apple's management team is expecting the March quarter total company revenue to grow low to mid single digits year over year. And if you don't already know what low to mid single digits means in terms of actual numbers, low single digits is 1%, 2%, or 3%. Mid single digits is 4%, 5%, 6%. When a company says low to mid, you can get rid of the higher end of the mid range and the lower end of the low range. So you remove the 1% from the low end and remove the 6% from the high end. And so a low to mid single digit forecast to me is something like 2%, 3%, 4%, or 5% revenue growth in the upcoming quarter for Apple in overall revenue. They expect the services segment to grow low double digits year over year. And this is similar. Low double digits means 11%, 12%, or 13% for Apple. They also expect gross profit margins between 46.5% and 47.5% as the company's mix shifts closer to services instead of products, because the services business is growing much faster than the products business. In fact, they might experience a decrease in product revenue while experiencing a increase in services revenue. And the trend has been the services segment growing much faster than the product segment in recent quarters, and that's lifting Apple's profitability, which is good news for Apple stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.